Good day everyone, especially to our respectable Professor Nalca de la Fuentes, and I am Krishia Mae Regidor, and I will be presenting our Investagram portfolio strategies that we use in choosing which stock to invest. But before that, we classify ourselves as a moderately aggressive investors, which primarily values higher long-term returns and is willing to accept significant risk. We believe higher long-term returns are more important than protecting our principal. We also endure large losses in favor of potential higher long-term returns. So, we use the fundamental analysis in analyzing each company. Fundamental analysis, this is known as the investor's choice. Here, we examine the competitive edge of the company, their future plans, and the value of the company. We look also for the value of the company's ratio, like earning per share, price to book value, and price per earning ratio. Price per earning ratio is how much the stock price is for every earning that we have. So a good price per earning ratio is between 5 to 25. Price per book value is how much the company's asset is, as reflected in the financial statement, meaning all the asset minus depreciation. Good PB ratio is when it's under 1.0, but under 3.0 is also considered okay. We look for the future expansion and the innovation of the company or the product. So here are the list of the companies where we invested our money. First, Jollibee Food Corporation, Alliance Select Food International, Monde Nation Corporation, Shell Petroleum Corporation, Manila Electric Company, San Miguel Corporation, GMA Network, PLDT, Globe, Converge, BPI, East West Banking Corporation, BDO, Cebu Holdings, and Ayala Corporation. The first one is the Jollibee Food Corporation. It has an earning per share of 4.28, return on equity of 5.08%, and price to book value is 3.39, and price per earning ratio is 55.33. So, Jollibee Food Corporation ratio is in good state. Also, Jollibee is the largest fast food chain brand in the Philippines, operating network of more than 1,400 stores, so a dominant market leader in the Philippines. Jollibee enjoys the lion's share of the local market that is more than all of other multinational fast food brands in the Philippines combined. So Jollibee has embarked on an aggressive international expansion plan with more than 270 international branches in the United States, Canada, Hong Kong, Macau, Brunei, Vietnam, Singapore, Malaysia, Saudi Arabia, United Arab Emirates, Qatar, Oman, Kuwait, Bahrain, Italy, and in United Kingdom. So we believe that Jollibee Food Corporation will continue to expand on the coming years. So the next one is the Alliance Select Food International. Its earning per share is 0%, return on equity is negative 50.52, and the price to book value is 1.11%, and price earning ratio is 0%. So Alliance Food Select International is a global seafood processor and cannery with manufacturing and distribution operation in the Philippines, Indonesia, and New Zealand. Though as of now, its ratio is not that high, but we believe that this risky investment will give us high return in the future, especially that the seafood products are tasty and it will have high value in the coming years. The next one is the Monde Nation Corporation. It has an earning per share of 11% and return on equity of 1.02% and price to book value of 4.28 and price earning per ratio of 52.5. So, Monde Nissin Corporation is a Philippine-based global food and beverage company with a portfolio of brands across instant noodles, biscuits, baked goods, culinary aids, and alternative meat product categories, including Lucky Me, Skyflix, Pita, MY, Sengraham, and Nissen. Monde Nissen also sells its alternative meat products globally under Corn Food and Corn brand. Since 2000, Monde Nissen has been consistently included in the top 50 of corporation in the Philippines based on gross revenue up until now. Monde brand is popular in the Philippines. That is why we invested in it. This three industrial company is a necessity. People will continue to buy their product and services because they need it. Stock market of this product will continue to grow. The next one is the Philippine Shell Corporation. It has an earning per share of 0.65, return on equity of 32.83, price to book value of 1.18, and price per earning ratio is 30.77. So, Philippine Shell Corporation grew its net income to 3.4 billion by end of the September as a significant recovery from its 13.9 billion loss in the same period last year. So, despite the mobility of slowdown returning from the 2-week enhanced community quarantine implemented in NCR and select provinces last August and the succeeding alert of 4 restriction. So, this is a good indication that the company continue to grow despite the pandemic that we are facing today. That is why we still invest in this company. The next one is the Manila Electric Company. It has an earning per share of 19.47, equity return on equity of 23.77, price to book value of 3.63, and price earning ratio of 15.24. So, Manila Electric Company, also known as Meralco, is an electric power distributor company in the Philippines. It is Metro Manila's only electric power distributor and holds the power distribution franchise for 22 cities and 89 municipalities, including the whole of National Capital Region and the exurbs that form Mega Manila. Shell and Meralco is also popular. A lot of people use these products and services. Their company ratio is good and people will continue to use these services and products. So the next one is the San Miguel Corporation. San Miguel Corporation has an earning per share of 2.93, return on equity of 6.65%, price to book value of 1.2%, price earning ratio of 38.57%. So, San Miguel Corporation is one of the Philippines' largest and most diversified conglomerates, with revenues equivalent to about 4% of the country's GDP in 2020. So, originally, it was founded in 1990 as a single brewery in the Philippines. So, San Miguel Corporation today has highly integrated operation with ownership in market-leading businesses and investment in various sectors such as beverage, food, packaging, energy, fuel, and oil infrastructures, property development and leasing from cements, car distributorship, and banking services. San Miguel Corporation has a portfolio of companies that is interwoven into the economic fabric of the Philippines, benefiting from us contributing to the development of the economic progress of the nation. We choose these companies because its brand is popular and the ratio are high. The next one is the GMA Network. It has an earning per share of 1.66, return on equity of 66.11%, price to book value of 5.4, and price earning ratio of 8.19. GMA Network is a Filipino free-to-air television and radio network. It is the flagship property of the publicly traded GMA Network. Its first broadcast on television was on October 29, 1961. We invested in GMA because we can see now that the ratings becomes high even before the closure of ABS-CBN. People continue to watch their network and stock market is increasing. So the next one is the PLDT. It has an earning per share of 108.30, return on equity of 20.26, price to book value of 3.30, and price earning ratio of 15.88. PLDT is the Philippines' largest fully integrated telco company. Through the principal business groups, from fixed line to wirelines, PLDT offers a wide range of telecommunications and digital services across the Philippines, most extensively fiber optic backbone and fixed line and cellular networks. So Globe has an earning per share of 150.93, return on equity of 30.63, price to book value of 5.7, and price earning ratio of 22.67. And the Converge, it has an earning per share of 0.85, return on equity of 21.59, and price to book value of 7.28, price earning ratio of 37.71. So we invested in this telecommunication company because, as we can see, because of the pandemic, people always use internet in work and school. Telecommunication has high demands today, and we believe that because of these demands, they will continue to improve their services and stock market will continue to increase. The next one is the BPI. It has an earning per share of 4.81, return on equity of 8.30, price to book value of 1.42, price earning ratio of 19.14. So BPI, throughout the years, BPI strove to deliver the highest standard of convenience banking through the ingenuity of technology and creative management. As the recognized most technologically advanced bank, BPI introduced the first successful automated teller machine or ATM service in the Philippines. Among BPI's other firsts are the issuance of the first debit card, the introduction of cashless shopping with the Express Teller Card, establishment of banking kioski, the express banking centers, the launching of telephone banking with the express phone, and the use of call center. BPI has distinguished itself by catering to the ever-evolving need of lifestyle of the public. The next one is the West Banking Corporation. It has an earning per share of 2.65, return on equity of 12.64%, price to book value of 0.35, price earning ratio of 3.57. And the next one is the BDO. It has an earning per share of 9.97, return on equity of 10.30%, price to book value of 1.3, and price earning ratio of 12.36. So we invested in this company because we believe that because of the technologically online banking will be in demand, people will continue to rely on bank. Someday banking and industry will have more higher stock prices. So the next one is the Cebu Holdings. Cebu Holdings has an earning per share of 0.26, return on equity of 5.14, price to book value of 1.30, and price earning ratio of 23.88. Cebu Holdings engage the ownership, development, and sale of real estate companies and properties. It operates through the following segment: commercial development, residential development, shopping center, corporate businesses, and others. The commercial development segment sells lot and plot shares. The residential development segment construct the markets, houses, and condominium buildings. The shopping center segment builds, operates, and leases retail spaces, entertainment facilities, food courts, and malls. The corporate business segments developments and rent out offices and buildings. So the next one is the Megaworld Corporation. It has an earning per share of 0.32, return on equity of 5.61, price to book value of 0.53, and price earning ratio of 9.88. Megaworld Corporation is the Philippines' biggest and most prominent property developer and leading businesses processes outsourcing office building provider in the whole country. So the last one is the Ayala Corporation. It has an earning per share of 38.20, return on equity of 6.35, and price to book value of 1.66, and price-earning ratio of 22.67. So, Ayala Food Corporation is a holding company that is mainly the business of real estate development, banking and financial services, telecommunication, electronics and information technology, water infrastructure development and management, and business processes outsourcing, and new investment in power, renewable energy and transportation and infrastructure. We invested in these three leading property companies because their businesses mainly focuses on real estate, and real estate today has high demand, especially if you are in the high growing economy. Real estate also gives you high returns, though it's more risky. So as you can see, most of our investment are long term and risky, but as what I've said earlier, we can manage to have losses because we believe that risky investments will give us high return in the future. So that would be all.